Welcome to the Lunch Hour with Mr. Credit.
That's just a straight shooter with upper management written all over him.
And today, it's Thrive Thursday.
Hey guys, you ready to let the dogs out?
What? Do what?
Now, get ready because we're giving you the unique insight to help you thrive in a competitive market.
Join us or die.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
Good afternoon. It's time for the Mr. Credit Show, where we attempt to make you smarter than everyone else. This is Jeffrey Kahn, board-certified tax attorney from the Kahn Tax Law Team. That's the law offices of Jeffrey B. Kahn, PC. And today, I'm on the hot seat. It's been a while, but it feels good. And it's always good to have you out there listening, and hopefully you will become smarter than everyone else after listening to this show. Well, we have a lot to cover today in the world of taxes. And helping me out today will be my associate, Amy Spivey, who will be calling in later in today's show. Today's theme is, of course, the IRS and big data. You know, with another tax filing and estimated tax payment deadline coming up, you may have spent the last few days thinking hard about your taxes. But you know, the IRS has been thinking about taxes for years, for decades. And recently, it's been positioning itself as a leader in using big data. And you probably thought companies like Google had a monopoly on using big data. Well, that's not the case. IRS, they're coming on board. They're realizing the benefits of having big data, managing it, and using it just like any other company operating in private enterprise. The difference, though, is IRS is in an enterprise that a lot of people don't really like. I mean, after all, who likes to pay taxes? Most people don't. And, of course, people having to pay taxes want to end up paying the least amount that's legally possible. So, each year, we have some pretty substantial deadlines. The biggest one being April 15th. April 15th is a huge date for us in the United States in that it's the deadline to file your income taxes. And if you're not able to file your income tax return on or before April 15th, then you know April 15th is the deadline to file an extension. And of course, that extension now extends the time to file the income tax return to October 15th. And that date's coming up pretty quickly. Now, keep in mind, an extension is an extension to file, not an extension to pay. So if you end up filing a tax return on extension by October 15th and you owe money, the IRS will still attach interest and late payment penalties to that liability. Now, I also mentioned estimated tax payment deadlines. And if you are self-employed, you have a quarterly estimated tax payment deadline coming up, the next one being due September 15th. Now, with all this, it's clear that the IRS is the dominant government agency in the United States. After all, if there are no taxes, there can be no government. Politicians know this, and over the decades, the politicians have ensured that the IRS has all the powers it needs to raise federal taxes from the citizens, residents, even even tourists who stay long enough in the United States. So, if you're a U.S. citizen, you think you have a place to run? You think you have a place to hide? Well, U.S. citizens can't even escape U.S. taxation by leaving the country, because the tax law requires U.S. citizens who currently earn more than $9,750 to file a tax return, even if they don't live in the country. Even if you were to renounce your U.S. citizenship, as 3,805 people did in 2011, you will still have to pay an exit tax of 15%. And that 15% is on all your assets, including your investments, homes, and even your personal possessions. That's right, the shirt off your back. So, with all of this extensive data collection by the IRS, how does the IRS keep track of it? Well, traditionally, the IRS has utilized and enforced tax compliance through the matching of data. So, for example, you work, you're an employee, and every year you receive from your employer a W-2 form. That W-2 form will state how much your wages were for the year, how much taxes were withheld, and you would reflect that information on your U.S. income tax return. That same information on that W-2 form, your employer is submitting that to the IRS. Now, the IRS has a form that it's received from your employer that it can match up to the information you put on your income tax return. That's what the matching process is. And if there's not a match, guess what? The IRS is going to generate a notice. The IRS is going to question why the numbers don't match. And in some cases, the IRS may say, hey, the number we received from this third-party employer is correct. We're recalculating your liability for the year, and we're going to send you a tax bill. This same matching process not only applies to wages, but also other 1099 forms. So earnings from miscellaneous income, if you're self-employed, gambling winnings, interest and dividend income, sales of assets, sales of securities and other investments, deductions, and so on. All of this third-party information is being fed to the IRS, and IRS is matching it. But the IRS is not stopping here. The IRS has signed a multi-million-dollar contract with Unisys to develop further big transaction processing, whereby the IRS is using these super computers, specifically Unisys ClearPath Diablo servers, running at an estimated 1,200 MIPS to process tax returns. For those of you who are not techies like myself, MIPS is a measure of a computer's central processing unit performance. MIPS is the acronym. It stands for Million Instructions per Second. These servers will reside at selected IRS data centers alongside several IBM Z196 mainframes, capable of running an estimated 8,000 MIPS. That's a lot of supercomputers processing a lot of instructions per second. Along with all this processing power are extensive data storage capabilities, which will be managed by IRS in their private cloud. That's right. The IRS has a private cloud. It is estimated that in the IRS private cloud, there are 7.5 petabytes of data. By the way, for you non-techies, 1 petabyte is equivalent to 1 quadrillion bytes. Do the math. That's a lot of data that the IRS has. But the IRS is not just stopping there. The IRS is now pursuing big data, social media analytics, just like Google. But unlike the normal corporate big data analytics, the IRS has one big advantage. It knows everyone's social security numbers. It knows all the tax information from the firms we as taxpayers interact with when getting tax returns prepared. And as such, the IRS can join the dots between Google, eBay, LinkedIn, Facebook, Yelp, Twitter, and perhaps your PayPal and credit card accounts, along with your emails to your overseas bankers. The IRS has access to every social media posting going back to 2008. So, don't think that after hearing my broadcasts, that by deleting your posts, that's all going to go away. It's there. It's in there. It's in the IRS's private cloud. The IRS has bragged that their computer can make a DNA blueprint of each of our behaviors. Amazingly, the IRS supercomputers can read all 200 million e-filed returns in just 10 hours. All this will allow the IRS to refine its algorithms to more effectively identify those taxpayers to be selected for audit or investigation. Yes, the IRS is acting like Google. So while none of us enjoys doing or paying our taxes, we as taxpayers can be comforted by knowing that the government is at the forefront of the big data revolution. And despite the use of these new technology skills to make the government itself more efficient, there are two things certain in life: death and taxes. Well, it's time for a break, but stay tuned because Amy is calling in and we are going to tell you how the IRS selects returns for examination. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team on the Mr. Credit Show.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Thrive Thursday on ESPN Radio 1700.
Welcome back. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team. Calling into the studio from our San Francisco office is my associate attorney, Amy Spivey. Amy, are you there?
Yeah, I'm here, Jeff.
Great. How you doing, Amy?
Good. How about yourself?
Doing pretty good. It's nice to be in the driver's seat.
Yeah.
So anyways, before I continue with Amy, I must say that the overwhelming majority of the taxpayers file tax returns, make their tax payments timely and accurately. As such, taxpayers have a right to expect fair and efficient tax administration from the IRS, including verification that taxes are correctly reported and paid, with enforcement actions against those who fail to comply voluntarily. And so, if your tax returns are selected for examination, you should contact the law offices of Jeffrey B. Kahn. We will provide you with a tax resolution plan, which is a $500 value for free as long as you mention Mr. Credit when you call to make an appointment. The number to call is 866-494-6829. That is 866-494-6829. So, Amy, I understand that there are 4 main ways that the IRS selects returns for examination. I guess I'll read off each one, and you can explain to the audience about what each one means. So the first one, potential participants in abusive tax avoidance transactions. What's that all about?
Okay, so some returns are selected based on information obtained by the IRS through efforts to identify promoters and participants of abusive tax avoidance transactions. Some examples of this include information received from John Doe summonses issued to foreign and domestic banks, credit card companies, businesses and participant lists from promoters ordered by the courts to be turned over to the IRS.
Okay. So basically, in this process here, the IRS is using the courts and the power that it has to summons information from third parties, like Amy said, credit card companies, even from foreign banks. That's how the IRS is able to go after people with undisclosed foreign bank accounts. So this is a huge thing that the IRS has had for a long time, but now they're more effectively and more frequently using it. Okay, the next one, computer scoring. That's a big one, Amy.
Yeah, so some returns are selected on the basis of computer scoring. There are a couple different scores here at play. So the first one is the Discriminant Function System, or DIF score. And this rates the potential for change in a return based on past IRS experience with similar returns. The second one is the Unreported Income DIF, which is UI-DIF. This score rates the return for the potential of unreported income. And based on these scores, the IRS personnel screen the highest scoring returns, and they select some for audit. And they also identify the items on these returns that will most likely need review.
So clearly, the IRS has a way where they can essentially handicap every single return that gets filed, especially your return. And just like horse racing could be handicapped, you could figure out what the spread is on different games. IRS is in the same business, doing the same thing with your income tax return. Amy, what's the next one is information matching. What's that all about?
So some returns are examined because what we call payer reports, and those are forms such as your W-2 that you receive from your employers each year, or Form 1099s, which include interest from banks. And if these do not match the income on the tax return, you may be selected for examination.
That's right. Remember, as I said in the first segment, this matching program that the IRS has in place is huge, where they're getting third-party information verifying numbers that should be on your tax return. And it doesn't take a human being to pick up the difference. Remember, the IRS has got those super computers matching thousands, if not millions, of pieces of information and big data that it has against your tax return. And all it takes is the computer to find out a difference, and it's the computer spitting out that tax bill. Doesn't even require an IRS agent to first study and find out that something could be wrong. All right, the fourth one, related examinations.
So returns can also be selected for audit when they involve issues or transactions with other taxpayers. That includes business partners or investors their returns were actually selected for examination.
Okay, so here what the IRS is doing is they're comparing returns between themselves. Good example is you got divorced and you're paying alimony to your ex-spouse. Well, you're deducting the alimony on your return. She's supposed to be picking it up as income. Both your returns have each other's Social Security numbers on it. The IRS supercomputers now have a way by comparing returns to make sure both sides are reporting the transactions, these alimony payments, the way that they're supposed to. Now, Amy, how does one find out if the IRS does select your tax return for examination?
Well, this is where you need to be very careful. There are many scammers out there who are calling taxpayers and they claim that they're the IRS. They'll threaten to come and arrest you, even deport you, unless you pay them money right away. If you are selected for an audit by the IRS, the initial contact will always be a letter by the assigned agent on your case, and it's always under official IRS letterhead. Okay,
so that's very important for everyone to pay attention to, and that is the IRS is not going to call you and threaten you with arrest or deportation and essentially try and hold you hostage to get you pay money right away. The IRS is going to use form. They're going to use procedure, and they're going to send you out an official letter. Well, Amy, it would seem to me that anyone could maybe try and duplicate or send a letter out purporting to be the IRS. How would I know if I get a letter from the IRS that it's truly from the IRS?
Well, you should it would definitely be under official IRS letterhead. And you may want to look at exactly what the letters say.
Okay.
And the first thing it would say, it would give you the contact information of the agent and what IRS agent reports to, what office he reports to. It'll also give you their ID number, so you can definitely call them and verify.
Okay. All right.
And secondly, it will also tell you how the examination is to be conducted. This can be sometimes by mail, through an in-person interview, and review of the taxpayer's records maybe at the agent's office or outside the agent's office, even at your business.
Okay.
And third, it will also tell you which years are being audited and what records specifically will be needed for the audit. And for these types of audits, taxpayers, they can act on their own behalf, or they have a tax professional represent or accompany them.
And that's where we come in, because we highly recommend that you do not go into the IRS on your own. The law offices of Jeffrey B. Kahn will provide you with a tax resolution plan. It's a $500 value, but you being a Mr. Credit listener will get it for free, as long as you mention Mr. Credit when you call to make the appointment. The number to call is 866-494-6829. Again, that number is 866-494-6829. Call that number. You'll make an appointment to meet with me, Jeffrey Kahn, board-certified tax attorney, right here in downtown San Diego. That number again is 866-494-6829. Well, stay tuned, because after the break, we are going to tell you more about how the IRS is matching big data to your tax return and selecting you for audit. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team on the Mr. Credit Show.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Thrive Thursday on ESPN Radio 1700.
Welcome back. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team. And on the phone from our San Francisco office, I have my associate attorney, Amy Spivey. Amy, you still there?
I'm still here.
Wonderful. You know, we're talking about IRS today and big data. And how is the IRS matching big data to your tax return and selecting you for audit? Well, let me give you some IRS estimates here. In a typical calendar year, employers, businesses, financial institutions, credit card companies, and other third-party payers will file 2.3 billion, that's right, billion, information statements. These information statements report income and financial transactions and can help individuals and businesses prepare accurate tax returns. Using these information matching programs, the IRS compares this third-party information statements with taxpayer data and sends notices to taxpayers when IRS systems detect inconsistencies. That's essentially how the matching program of IRS works. And the IRS has tailored specific types of matching programs that go after different types of taxpayers. So, Amy, tell us how some of these programs work.
Okay, so the first one is called the Individual Automated Underreporter Program, or AUR. And this matching program is better known by the primary notice name, which is CP 2000, Notice of Proposed Adjustment for Underpayment or Overpayment. The IRS system automatically sends this notice to when items reported on your Form 1040, which is the U.S. individual income tax return, they don't match the information reported to the IRS by employers and other payers. And the first round of these notices usually arrives just after Thanksgiving, and the second batch arrives towards the end of next year's filing season. The CP 2000 notice has been a mainstay of IRS information reporting for decades. In 2012 alone, the IRS issued more than 4.5 million CP 2000 notices, with an average of 1,572 in additional taxes owed.
Wow. Boy, is that a nice Thanksgiving present. You know, you have your turkey, and then the next day you go out to the mailbox and look what's sitting in there, a CP 2000 notice, probably asking for $1,572 in additional tax from you. Unbelievable. But this is something that the IRS does. It's just not a few notices. We're talking millions of these notices being sent out to you, waiting for you to open up, perhaps after you had your turkey. So, Amy, what other matching programs has the IRS employed?
Well, another one that's fairly new is called the Form 1099-K Merchant Card Transaction Matching Program. And in 2012, the IRS started receiving from credit card companies the Form 1099-K, which is a payment card and third-party network transaction form. And with merchant card transactions now being reported to the IRS quickly began using this information to match against business tax returns. However, because businesses do not specifically report merchant card transactions as separate line items on their tax returns, say as separate from cash, the IRS can only infer potential underreporting.
Okay, and this is basically now where the big data comes in, because here the IRS has got a great tool. They're getting third-party information from the credit card companies as to how much a merchant receives in credit card sales. Okay, so the IRS is getting more information than what they had before, but they don't have an exact way to match it up, at least not yet. The IRS is working on enhancing the 1099 matching program so that it can be more efficient in identifying those businesses that are underreporting their sales. So, if you receive one of these notices that we've talked about, it's important that you don't ignore it. We have a special offer for our Mr. Credit listeners. The law offices of Jeffrey B. Kahn will provide you with a tax resolution plan, which is a $500 value for free, as long as you mention Mr. Credit when you call to make an appointment. Call our office at 866-494-6829. That's 866-494-6829. And you will make an appointment to meet with me, Jeffrey Kahn, right here in downtown San Diego. So, Amy, is there a special type of matching program that the IRS has where somebody doesn't file their tax return?
Yes, they do. It's called the Automated Substitute for Return Program. And basically, when a taxpayer does not file their return and the information has some sort of, or the IRS has information that the taxpayer was required to file, the IRS uses the data to file return on behalf of the taxpayer if there's a projected balance owed. And this is called a substitute return. And in 2012, the IRS used information statements to file 803,000 returns for taxpayers, and that totaled $6.7 billion in additional taxes owed. And what's bad about this is that in almost every case, the amount that is actually owed when a tax return is filed by the taxpayer is much lower than what the IRS says a non-filer taxpayer owes. And we even have cases where the IRS ends up owing money to our clients.
You hear that, folks? If you don't file a tax return, the IRS is going to file one for you. The amount that the IRS says you will owe on that will always be higher. And here we've had clients come to us with these huge tax bills, and after we were done with it, there were cases where the IRS was writing a check back to our client. So, Amy, where in the future is the IRS going with their use of big data?
Well, the IRS has been getting a lot of help from Congress, where Congress is basically expanding the IRS's reach to access more and more information to enforce compliance and implement new legislation.
And, Amy, you're a smart person. I bet you have at least one good example of new powers enacted by Congress that have been bestowed on the IRS.
I do, and it's a big one. It's called the FATCA, which stands for Foreign Account Tax Compliance Act. And this legislation became law in 2010. And starting this year in 2014, the IRS will have the ability to match taxpayers' returns against the information it receives on U.S. taxpayers with accounts at foreign financial institutions. The IRS will likely scrutinize taxpayers who have not filed Form 8938, which is a statement of specified foreign financial assets, or the FinCEN Form 114, which is a report of foreign bank account, which people commonly call the FBAR. Our office has a lot of cases representing taxpayers with undisclosed foreign bank accounts. It's a big issue right now with the IRS.
That's right. It is a big issue with the IRS. For a long time, the IRS couldn't get access to foreign bank accounts and, of course, U.S. taxpayers having foreign bank accounts. But that landscape has changed over the past few years, and clearly with FATCA in place, and it's the law of the land, the IRS has got this huge power over the foreign banks that they're able to get this information, and the IRS has the means, has the resources to match it up against U.S. taxpayers' tax returns and then start audits, start investigations. In a recent U.S. Government Accountability Office study, that U.S. Government Accountability Office is the GAO, that office showed that the IRS spends $267 million on underreporting matching programs. Compare that to the $4.2 billion the IRS spends on audits. But these automated information matching programs, which is the computers doing their business, doesn't involve any human beings. Those programs will return almost 6 times more revenue than the audits that require human intervention. So you could see why with fewer IRS agents and reduced budgets, the IRS is increasingly relying on technology-driven matching programs to bring in more tax dollars. And so again, we have a special offer for our Mr. Credit listeners. The law offices of Jeffrey B. Kahn will provide you with a tax resolution plan, which is a $500 value for free, as long as you mention Mr. Credit when you call to make an appointment. Call our office to make an appointment to meet with me, Jeffrey Kahn, right here in downtown San Diego. The number to call is 866-494-6829. Again, that number is 866-494-6829. Well, stay tuned as we will be taking some of your questions. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Thrive Thursday on ESPN Radio 1700.
Welcome back. You are listening to Jeffrey Kahn, the principal tax attorney of the Kahn Tax Law Team, along with my associate, Amy Spivey, who's up in San Francisco.
Hi, Jeff.
Okay, Amy, so in this segment, you usually pull questions from the Mr. Credit and Kahn Tax Law inboxes for me to answer, so take it away.
Okay, so the first person asks, is it true that taxpayers with legal counsel are treated better by the IRS?
Oh, that's a very good question. You know, it's unfair, even illegal, but it's also human nature. You know, IRS agents are flesh and blood, and if they can get away with bullying someone into that agent's interpretation of the law, well, they probably will. A tax lawyer, your tax lawyer, can ensure the IRS is playing by the rules and treating you fairly. IRS investigators and agents, they are a lot more careful about asking inappropriate questions or wasting your time with unnecessary requirements if they know they're dealing with a tax attorney. And remember, a tax attorney, your tax attorney, represents you and your best interests, not the IRS. A lot of times an IRS agent or revenue officer may say, oh, you don't need to go hire somebody. Trust me, I'll be looking out for you. But really, is that the truth? Who are they working for? They're working for the government, not for you. Your tax attorney, though, works for you. Okay, Amy, what's the next question?
This one's also a related question, and the person asks, but will an IRS agent get upset with you if you hire a tax attorney?
Yeah, I hear this question a lot, too. And sometimes people come to us when they wish they would have hired a tax attorney sooner. Now, the good agents prefer dealing with tax professionals, such as Amy and I, because the agents don't have to waste their time and patience explaining to a layperson the ABCs of a tax audit or the basic IRS guidelines for criminal investigation. Essentially, the agents in dealing with us as tax professionals are getting to the meat of the matter. They're getting to the core of the matter, and whatever is discussed is what's needed to be discussed so that we as your tax counsel have a good understanding of where the IRS is coming from and where we need to fight them, where we need to defend you. In fact, hiring an experienced tax attorney is generally seen as a sign of good faith by the taxpayer to resolve their tax issues. That's right. The IRS, at least the good agents of the IRS, will recognize that by a taxpayer engaging tax counsel, they're serious about getting their tax problems resolved. Even the IRS's own Declaration of Taxpayer Rights, it's sometimes referred to as the Taxpayer Bill of Rights, encourages taxpayers to hire tax counsel. And if you are in a situation where you didn't follow that advice and you're before an IRS agent and that IRS agent is interviewing you and you now start feeling a little uncomfortable, you have a right under the Taxpayer Bill of Rights to stop, to end that interview and say, before I say anything else, before I give you anything else, I want to speak with tax counsel. I want to contact a tax attorney. And that agent is required by law that they have to terminate that meeting, that they have to stop trying to pry information from you, and they have to let you go on and get tax counsel. So don't give up that right. You want to utilize that to your benefit. And now that you know that that can't be held against you, you should go ahead and exercise that right. And it's important to note that what we've been saying all along is that you hire tax counsel. Tax counsel's different from a so-called tax relief company because unlike a tax relief company, tax counsel, and that's who we are, we're a law firm. And as your attorney, we can extend privileges and rights that you wouldn't have otherwise by going to a non-attorney. And one of the biggest things is attorney-client privilege. It is good to know. It is reassuring to know that you could come in and meet with us and have a private, confidential conversation where you are disclosing information to us and we are giving advice, we are giving guidance, and whatever is discussed between us is privileged. It can't be divulged to third parties. It can't be subpoenaed by the IRS. It's privileged. And that is huge, and that is something that you can only get when you meet with a tax attorney. And that is why the law offices of Jeffrey B. Kahn will provide you with a tax resolution plan, which is a $500 value for free, as long as you mention Mr. Credit when you call to make an appointment. The number to call is 866-494-6829. You will then be meeting with me, Jeffrey Kahn, your board-certified tax attorney, right here in downtown San Diego. Again, that number is 866-494-6829. Well, Amy, thanks for calling into the show.
Thanks for having me.
It's always a pleasure. I'll be seeing you very soon. Well, we are reaching the end of our show. Keep sending us your questions. Please let Mr. Credit know how you like the show by going to the Mr. Credit website or our website at www.kahntaxlaw.com. That's KAHN taxlaw.com. Have a great day filled with smart decisions.